Let's talk about the stock market, a place that can seem mysterious, intimidating, and even overwhelming at first glance. You've seen the headlines: big wins, big losses. The media loves to highlight dramatic stories, making it feel like fortunes are made or lost overnight. It can seem like a casino, where luck rules and risk is everything, but that's not the real story behind long-term wealth. The stock market isn't about gambling or luck. It's about making informed decisions, understanding the risks, and having a plan. It's about having a smart, disciplined strategy and playing the long game, sticking to your plan even when the market gets noisy. True wealth comes from consistency, patience, and knowledge, not risky bets or chasing the latest hot tips. The most successful investors are those who keep learning and stay committed. Think of building wealth like building a house. You need a blueprint, a strong foundation, and you build it brick by brick, step by step. Your financial plan is your blueprint. It guides your decisions, keeps you focused, and helps you avoid costly mistakes. Your first investments are your foundation. They might seem small, but they're the start of something much bigger. Regular contributions are the bricks. Each deposit, no matter how modest, adds up over time and strengthens your financial future. This steady, methodical approach is what separates successful investors from those who panic and quit when things get tough. Forget the image of frantic traders and wild speculation. That's not the path to lasting wealth. Your journey can be calm, deliberate, and powerful. You're in control, making thoughtful choices for your future. Investing is about turning today's earnings into tomorrow's wealth, taking control of your financial future, one decision at a time. It's not about luck, it's about making choices that align with your goals, values, and dreams for the future. And it all starts with understanding the fundamentals. Ready to take the first step? Let's get started. So what is the stock market? It's a marketplace where people buy and sell pieces of ownership, stocks, in public companies. When you buy a stock, you become a part owner of that business. That's powerful. You can own a piece of companies you use every day: Apple, Amazon, Starbucks. If the company grows, your stock's value can rise. That's called capital appreciation. Some companies also pay dividends, cash payments to shareholders. Not all companies pay dividends, but many stable ones do. The stock market lets you put your money to work by owning a slice of the world's biggest businesses. It's not exclusive. It's a place where you belong. Why invest in the stock market instead of just saving? It's a question many people ask when they first start thinking about their financial future. At first glance, putting your money in a savings account might seem like the safest and most responsible choice. But here's the catch: savings accounts barely keep up with inflation. That means over time, the money you've worked so hard to save actually loses its purchasing power. What you can buy with your savings today might cost much more in the future. The stock market, on the other hand, offers the potential for real long-term growth. By investing, your money has a chance to outpace inflation and actually grow in value, not just sit still. The secret behind this growth? It's called compound growth. This is when your investment earnings start earning their own returns, creating a powerful snowball effect that accelerates over time. For example, let's say you invest $1,000 at a 10% annual return. In the first year, you'll earn $100, bringing your total to $1,100. Next year, you don't just earn 10% on your original $1,000, you earn it on the new total, $1,100. That's $110 in growth, not just $100. Each year, your returns build on top of previous gains, so your money grows faster and faster as time goes on. Over decades, this compounding effect can transform even small, regular investments into significant wealth. The earlier you start, the more time your money has to multiply. That's why starting early is so important. Time is your greatest ally when it comes to building wealth through investing. Compounding is the ultimate wealth-building machine, quietly working in the background to grow your investments year after year. Don't let your money sit idle in a low-interest account. Put it to work for you by investing and letting compounding do the heavy lifting. The best time to start is now. Take that first step and let your money grow for your future. The biggest fear? Losing everything in a market crash. Yes, markets go down, but downturns are temporary. History shows the market always recovers and reaches new highs. The real mistake is panic selling during a crash. That locks in losses. The key is a long-term perspective. If you're investing for decades, a downturn is just a blip. In fact, market drops can be opportunities. Stocks go on sale. Promise yourself, don't panic sell, stick to your plan. The biggest risk isn't a crash, it's missing out on long-term growth by not investing at all. Don't let fear rob you of your future. Stay invested, stay calm. Ready to take action? Here's your 5-step plan to kickstart your investing journey and build a brighter financial future. Whether you're just starting out or looking to get more intentional with your money, these steps will help you move forward with confidence. Step 1. Set clear financial goals. Take a moment to think about what you want your money to achieve for you. Know your why. Maybe it's saving for retirement, buying your dream home, building a college fund for your kids, or simply gaining financial freedom. Step 2. Choose a brokerage. This is your gateway to the world of investing, so take your time to research and compare your options. Look for a platform that's easy to use, offers educational resources, and fits your needs. Pick a reputable, low-cost firm. Fidelity, Vanguard, and Schwab are all great places to start for beginners and experienced investors alike. Step 3. What to invest in. Start with index funds or ETFs, which are baskets of stocks or bonds that track the market. These funds give you instant diversification, meaning you own a piece of hundreds of companies at once, reducing your risk and smoothing out the ride. Step 4. Start small. Don't let big numbers scare you away. Even $50 or $100 is enough to get started. The important thing is to begin, no matter how modest the amount. Many brokerages now offer fractional shares, so you can buy a piece of a stock or fund with just a few dollars. Step 5. Invest regularly. Set up automatic transfers every month or with each paycheck, so investing becomes a habit, not a chore. This strategy is called dollar cost averaging, and it helps you buy more shares when prices are low and fewer when they're high. Regular investing takes the emotion out of the process and helps you build wealth steadily over time, no matter what the market is doing. Don't wait for the perfect time. There's rarely a perfect moment. The best time to start is now. Taking that first step is a huge psychological win and sets you on the path to financial growth. Remember, diversification and consistency are your best friends in the world of investing. Ignore the noise. Don't get distracted by headlines or market swings. Stick to your plan and keep moving forward. No more excuses. The tools you need are right at your fingertips, available on your phone or computer, ready whenever you are. Follow these steps and you'll be well on your way to reaching your financial goals and building lasting wealth. The journey begins with your first investment. Take that step today and watch your future grow. Now, a few simple rules to keep you on track. Rule 1. Don't invest money you'll need in the next 5 years. The market is for long-term goals. Rule 2. Ignore the hype. Chasing hot stocks is gambling, not investing. Stick to your plan and diversified funds. Rule 3. Reinvest your dividends. Let your earnings buy more shares and accelerate your growth. Rule 4. Keep learning, but be patient. Wealth takes decades, not days. There will be slow periods. Don't get discouraged. Trust your plan and keep contributing. Boring is beautiful in investing. Stay steady, stay smart. Your future self will thank you. You now have the knowledge and the plan. The stock market is a tool for building real, lasting wealth. You're ready to face downturns with confidence and invest for the long term. The most important factor is time. Don't wait. The power to change your financial life is in your hands, not Wall Street's. Take the first step. Open that account. Make your first investment. Stay consistent. Keep learning, and never lose sight of your goals. The power is yours. Start building your future today.